iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. Navigating today's real estate market can be tricky. Want to buy or sell a house, finance or insure a house, or stuck with a house and don't know what to do? Florida Talk Real Estate has been your local one-stop real estate shop since 2012. Get the advice you need from your local real estate pros. Here are your hosts, Jim DePola and Johnny C. live on Real Radio.
Good morning, South Florida, and welcome to another edition of Florida Talk Real Estate. We got you for, count them up, 2 hours of infotainment. It's great to have you out there. 92.1, 1017, the old terrestrial radio. Thanks for tuning in. Maybe you're on your free download. I said free download of your iHeartRadio app. We're worldwide, by the way, if you're on the app there. And yeah, we are just that big, worldwide on a Saturday. And of course, live streaming as well. If you like to tune on in via the live stream, you can do that on Facebook, Florida Talk Real Estate on Facebook, on YouTube as well, Florida Talk Real Estate LLC, home of a ton of informational chunk videos, plus a live stream on a Saturday. If you're there out the gates, thanks for being there. And of course, you can always join into that stream or check it out after the fact. That kind of stuff stays up there forever, by the way. Thanks for being there. 877-927-6969. That's toll-free number if you'd like to be a part of the festivities today. Questions, comments, concerns in the world of real estate, want to take part in the conversation, and dial in. First voice you hear, that's the melodious tones of our producer extraordinaire, my brother from another mother. What's up, Jim D?
Hello, and good morning, gentlemen. Happy to be here on a Saturday with you.
It's always good to see you on a Saturday, my brother, and great to be heard. I'm Johnny C., your old buddy, your old pal. Let's get to the important people. Ooh, yeah. Like Mike Rauch, he's the mortgage guy from the mortgage firm. It's good to see you, Mike.
I know. Dude. I feel like I've been out forever.
Isn't it weird when you have a routine of seeing somebody on the regular and you don't see them for a couple weeks?
Yeah.
It feels like months.
I've missed you.
Oh, I've missed you too.
Yeah, and the audience.
Yeah, good. They miss you as well.
Good to be back.
Welcome back into the fold.
Yes. Hello.
Ross Komarinetz is always here. Well, I can't say always because we had a span too where I was like, man, has it been like 3 months since I've seen you, Ross? He's with Brightway Insurance, Juno Beach. How are you, my friend?
I'm doing well. It was about 3 weeks. But yeah,
3 weeks, 3 months.
Yeah, same thing.
So they say time is relative, right? So the older you get, the faster it goes, something like that. I don't know if
I've heard that.
Exactly right.
No, yeah.
I'm experiencing that.
It's real. It has fully set into my life in the last handful of years. There's so many times where I'm like, oh, that was like 2 years ago. My wife's like, that was 8 years ago.
Oh
yeah. Okay. That was 8 years ago. That was last month, dude.
It could be that your brain's getting full, and so you're like not able to store these, local memories. So time dilates on you.
Can I have it my way? I feel better about it my way.
Oh, what's your way?
Yeah, your way.
Oh,
makes
the
it feel
time's
like,
actually slowing down.
Yeah, like I'm depreciating in some way.
Yeah, what's the difference though? Honestly,
it's the same, right?
You either have the memory or you don't, right?
True.
Yeah.
Well, I have the memory. I just can't date stamp the memory. I can't like associate to how long ago it was.
Yeah.
It
could be that you're becoming specialized as well. Like, do you remember that concert?
He's
that one time. That one time.
I like where he's going.
That one time you saw that one band. You remember what year that was?
See,
and
that's
like what?
The thing.
Yeah,
that's the thing. I'm like, oh yeah, we just saw them like 2 years ago. She's like, yeah, that was five years ago. Yeah.
I can get the year like of a memory, but then it feels like 5 years ago, but really it was 2002.
Yeah.
Okay.
I do this all the time when I'm doing like a pre-approval interview. I have to get dates of like when you live somewhere and your kind of your work history. And a lot of people have to have that memory like jarred for them. Like, so how long you been at your current place? Oh, a few years. Do you remember like what year you moved in? Right. And then I basically have to have a month and a year. Yeah, at least. Yeah, because I got to put the information in, right? So was it around your birthday you moved in? You remember? Was it summertime?
And I know this conversation. We've had those conversations. Like, let me see. Yeah, it was weird. Let's get to, of course, our fearless leader on a Saturday here. 13 plus years now, I've told you, he runs the top producing Keller Williams team, the Florida Home Pros, Keller Williams Innovations. You'll find Jimmy D. There's Jim DePola. Jimmy D, how you be?
Hey, I'm doing okay.
I'll stall it for you as long as I can.
Yeah, I know. I appreciate it.
He's struggling. His headphones are all
my
headphones
broke today.
Oh, do you need these ones?
No, I'm good. I got a whole bunch in there in the break. I'll switch them out.
All right.
Now the question is, are those ones going to go in the garbage, or are they going to go in the bag?
Gone. Yeah, they're gone. I bought these. Talk Real Estate with Rob and Jim.
Oh, so they've been around.
They've been
13
around
years.
a little
Wow.
bit. Yeah, I've knocked them around. They definitely got their money's worth.
Nice. Well, you could, sometimes you knock an ear off. You go just with one.
Yeah.
So you could keep that for, when you choose to knock one off.
Yeah.
I got single ear.
What are we talking about?
You go single ear?
I'm 1 year on, 1 year off.
Nice. So Ross is like eyeballing those. Like, man, those are custom.
Yeah.
Hey, they're yours if
You
you
can
want 'em.
paint those, get them looking good again.
Mhm.
Yeah.
Yeah, just shine them up,
Dazzle.
buff them.
Hey, I'm so glad
Give
to
it a
have
buffing. Yeah.
I'm so glad to have the whole crew again. It's so nice to have everybody in the room together. I mean, and thank you to AJ Holman from Experienced Appraisers, filled in twice for us.
Yeah. It was
Hold
awesome.
it down.
2 weekends
Thanks,
in a row. I really appreciate it. Always gives us great information when he comes on the show.
Truly.
I really love having that appraisal perspective, and also a homegrown Florida boy.
Yeah.
So he grew up in this market and knows everything that's going on. So
That's a good thing.
And
Yeah.
Okay.
Correct me if I'm wrong. He's a realtor in some ways, right? Doesn't he?
yeah,
do a
he
little
does have a realtor's license, AJ. He does a little bit of that, but he's staying pretty busy with the appraiser stuff right now.
Right.
And just so everybody knows, he's not really an appraiser for lenders anymore. He used to do that for a long time.
He's
But-
on our rotation,
but
but
is
it's
he? Yeah.
voluntary whether he picks up jobs or not. So I think he voluntarily
Declines.
chooses to do private appraisals
Yeah.
over lending-based appraisal. I'm not sure why that is, but
Um,
that's what he does the most of. Yeah.
Yeah, and the other, so he does do mostly private appraisals. And last week we talked about the 3 reasons why you would need to hire an appraiser. And he gave us 3 examples and all that. So if you want to check out more about appraisals and stuff like that, check out last week's show or the week before that. So glad to have everybody in the studio today. Man, Ross doesn't even know this yet because I was doing show prep yesterday. I'm throwing you under the bus in a good way. This is a good thrown
Good
under the bus.
Mhm.
This is
Yeah, this
awesome.
is a
The best
good bus. You're
ever.
going to like the run over.
Yeah.
You need to
On
be
this
flattened
one.
a little bit, Ross.
Is we got more good news on the home insurance front coming up, and we're going to talk about that today. Exactly how Ross thought it was going to, not saying that he was guaranteeing it, but he predicted what's happening in the cycle that we're having now, and it's all unfolding the way that he expected it, that we talked about and agreed that probably will happen that way. So we're going to talk about more good news about reducing costs for home insurance.
Cool.
I know, Ross, I sent you with a guy last week. I think his name was Adam. I'm sorry, because I sent several people a bunch of different places. But I texted him, and he said the stuff looked really good that you sent him, and that he was just looking for a discount on his insurance. And he said when he got back on vacation, he'd be calling you or whatever. So more savings for more customers. All he wanted to do, he heard our show a bunch of times, doesn't really know us that well. But he's like, hey, I just got a really bad insurance bill. Let me see what Ross can do.
Yeah.
And it looks like he's going to get some relief there, and good for him.
Yeah. He got answers pretty easily.
Yeah,
pretty.
Yeah, it's pretty easy. He sent me an email. That's the guy who sent us the declaration page, Ross.
Oh, yeah.
He even sent the declaration page. This guy listens to our show.
That's awesome.
So Kyle, who's a listener, was listening last week too, and emailed me, and then he emailed me when the show was going on, and then sent an email to follow 2 minutes later that said, "Oh man, I just heard the rest of it. I got to send you my deck page later." So he actually sent it to me yesterday. So
Ross
I
is
told him I'd
training
get
them.
back to him.
Perfect.
Get them all lined up.
It just
Hey, you
makes
get
it
better
easier.
results.
I don't care
Yeah,
if you
get-
cross out what you're paying. I just want to see the coverages you have.
Yeah,
It's all about
get
apples
better
to apples,
result.
right?
Yeah.
Get a better result. So we're going to be talking a little bit about that today, about why we have more good news on that front. We're also going to be talking about, this is very interesting. We're going to be talking a little bit about what the Fed talked about at the meeting of the minutes when they cut the quarter point. There was a lot of talk about the housing market specifically, not so much unemployment, more housing, and what their thoughts of the future, how the housing outlook might affect their decisions about the rate cuts or maybe not rate cuts. Also, Fannie Mae came out with new projections of what's going to happen with the GDP, but more importantly, what they think the interest rates are going to be by the end of this year and where they think they're going to be at the end of next year in 2026. I think the rates are going to surprise everybody, what they're predicting. Very surprising to me, at least.
This is Fannie and Freddie's prediction?
This is Fannie Mae's prediction.
Gotcha.
Yeah, Fannie Mae's prediction. I thought that was kind of interesting. Also, we're going to talk about interest rates because I've been pushing it off for a while, waiting for Mike to come back. And we're going to talk about what's happened in the month that Mike was gone. That's right, 1/12 of the year, poof, gone from Mike Rauch.
I feel like it was three shows, like Ross. Like, where were I? I was at FSU for family weekend,
Nice.
and I was in New York. Why did I miss another one?
New York City.
You definitely missed
Yeah.
3, but I think you missed 4. But you missed 1, then you came back for a week,
and
and
then
then
it
you
was
missed
3.
3 more weeks. So you missed 1/12 of the year.
How dare
I'm
you,
sorry.
Mike? How dare you? How's New York, by the way? And nobody
So
cares
it's
about
not New York
FSU.
City. We're the family we visit is in I guess it's upstate. I mean, it's not Manhattan. So is that upstate?
Is it near Woodstock, like that area?
It's called Port Jervis, and
You know
it's
it,
right
Timothy?
where New York, Pennsylvania, and New Jersey all meet.
Okay.
All right.
They come together, and it's called Port Jervis.
I've been to the city of Woodstock. You know, Woodstock didn't happen in Woodstock, but it was close. But that city, I love that city, Woodstock. My parents took me up there when I was a teenager. That was an awesome little quaint country town.
Yeah, and one thing I love about the Northeast is you can just get in the car and go a couple hours and you're in a whole new state. Like in Florida, go ahead and drive 5-6
4
hours.
hours.
Still
Yeah.
Florida.
That's true.
Yeah.
Yep,
You
yep.
could drive 8 hours in Florida,
And
right?
you're in Florida.
And you're in
Yeah.
Florida.
Actually,
I grew
you
up in
could drive-
California. It's kind of the same
Yeah,
way, unless you
that's
went,
you could drive what, like
straight east.
13 hours, right? You down start
Down
at
in the
mile
Keys.
1,
Yeah.
Yeah.
Yeah, for
start
sure.
at mile
You can
1,
do it.
go all the way through, over to
That'll take you a minute.
Louisiana.
That'll take you a minute. 877-927-6969, toll free. Who we got over there, Jimothy?
We got Mike, speaking of New York, we got Mike checking in from New York. He wants to talk about hidden costs when buying a home. Hey, Mike, welcome to Florida Talk Real Estate.
How are you guys doing today?
Hey, Mike, very, very good. We know that just so the audience knows, Mike just bought a property in Central Florida area. He called us from the show. We got him a top agent. Josiah's never called me back, Mike, to set up that three-way interview. So I'm going to have to bug him again this week. He's a busy guy.
Why not?
Yeah.
So I just had a couple of things to go over. So we purchased a new home in July in Haines City. And first, I want to give a shout out to my home watch services, Mike Weisner, and he is located in, where does it say, Services of Florida, LLC. Can I put a phone number out there?
No, not right now, Mike.
Okay.
Yeah.
So it's Home Watch Services of Florida. His name's Michael Weisner.
Mhm.
Anyways, what he does is he comes to our home once a week for a fee, obviously, and he varies his hours and days. So nobody can keep an eye on, you know what I'm saying? Because the house is just sitting. And then secondly to that, I just wanted to call and explain, even though you have a new home, things need to be addressed. We had to have a fence put up because we have a dog when we moved down there full time. We're still living in New York till next July. It was suggested we put gutters on the house, and once I saw the rain down there, we did that. Things cost thousands of dollars. And then also, too, we have a mole issue in the backyard. I'm getting that addressed. I've got red ants in the box where our reclaim water meter is that needs to get looked at because there's a leak between the meter and the sprinkler system controls. So our bill was like $180 for a couple of months. It was ridiculous.
Oh.
So that's where we located the leak. The builders handling that. Meritage Homes have been fantastic thus far. Any issues we've had, they've addressed. So I'm going down next week to do some work on the house. But whether you're buying a used home, a new home, anything, people need to realize it may be in your budget to pay your mortgage, but there's a lot of phantom costs that come along with that. I'm paying a landscaper. I'm paying home watch services. That's just being a responsible owner. And what else did I want to say about that? No, that's pretty much it, because I never hear really much about, you hear about people buying houses, but you don't really you may not understand that there's phantom costs, or you may have to pick up some tools and learn how to do things yourself a little, you know?
Oh yeah.
Uh-huh.
Oh yeah.
When I first heard that introduction, Mike, that you were talking about hidden costs when buying a home, I was thinking, okay, it's like closing costs related to your settlement or to your financing. But he's talking about
Maintenance.
Post
costs that
closing
you,
ownership.
yeah, that, like that phantom costs. Like you need money even after you buy the home, just in case. And he bought brand new construction, right?
Yep. Brand new.
So
Yep.
yeah. That's actually, it goes to the point when people are talking to me about, sometimes the question is, should I put more money down, to get a more comfortable payment? And I say, of course, yeah, if you can, absolutely. But the bang for the buck there, it's about, at today's rates, Jim, it's about $35 on your payment, your principal and interest payment per $5,000 of money that you put down. So you could borrow $5,000 more, your payment's going to be $35 a month higher, right? Kind of ballpark, and somewhere between 30 and 35, depending on your rate. And so that question is, well, where is that 5,000? Let's assume that you have a choice. Where is that 5,000 better served? Like in your bank account, accessible to you for things like what Mike is talking about,
Right.
or other moving expenses, whatever it is, or stick it into the piggy bank, which is the equity position of your home, which is great, but difficult to access if you needed it, right?
Mm-hmm.
Especially like immediately after purchase.
Right.
So it's something that people have to consider for sure.
Right. So
one of the conversations I love that you have with folks too, because that's, you're like, I don't care.
And of course, it's the loan guys. Like, yeah, of course you should borrow more. Right.
And you're like, I don't know.
Caveat, it's your loan guy giving you this advice.
You seem to lean into a lot of times like, yeah, cash is king. I like to hang on to my cash when I can.
What would I do if it were me?
Yeah.
Right. If we're talking about lowering my payment $35, or even $70, or keep 10K kind of available, accessible, even if you never use it, it can be there, right?
Mm-hmm.
That's a good feeling.
Mm-hmm.
Once it's in the house, it's just hard to get out.
It's hard to get out.
Yeah, especially if you need it quickly.
When have you come back down since the original purchase, Mike?
Have I come back down to Florida, you said?
Yeah, to visit the house.
I'm coming down this week. I'm going to spend 10 days there, obviously working on the house.
Mm-hmm.
What was the last thing I wanted to say? Oh, this is a great example. So the home had been sitting 6 to 12 months before we purchased the home. So I wanted to have the AC system looked over completely. It was found to be low on refrigerant. And I myself, I'm an electrician, but I don't deal with any of that when it comes to refrigerant. I think you need a license to purchase that, whatever it may be. It was 4 pounds low. Guy showed me on his meter. We were on the phone, etc. It's hard to troubleshoot from 1,500 miles away. I'll tell you, it's a little frustrating. But he had to put 4 pounds of refrigerant in plus the service. You're at $550. I didn't call you to complain about money. We set ourselves up correctly so that we have money in the bank. I didn't even touch our savings, but I'm just saying there's a lot of costs involved.
Shouldn't have that been under warranty? The low Freon?
The company,
I think there's a problem there.
that I called, the company that installed it, I could not reach. You're correct about that. And then I did a little research on who's the best down there. I'm comfortable with this company, so I'm going to stay with them. They're meeting me. The service tech, same guy, is going to meet me. He's actually from upstate New York. He's going to meet me the Monday I'm down there, and we're going to go over the readings on the refrigerant just to make sure there's not a leak somewhere. We want to make sure, I think it's like 14 pounds that have to be in the system. And I don't know, I'm just excited to get back down there. But, a couple of things have arisen where it's added up a little bit.
Yeah, that's a wonderful lesson for a bunch of homeowners out there. And I think it's a worthy conversation too. Like, hey, just be mindful. Some things can pop up that you kind of otherwise thought were going to be handled. Hey, we hope that you have safe travels coming down to Florida. Thank you very much for the phone call on a Saturday. You are very much appreciated out there.
What were you saying, Mike?
I was going to say one last thing. A friend of ours got an electric bill. I've spoken about our electric bills in New York. Her bill was like $700. She couldn't afford it. She had to put like half on a credit card. So that's what's going on up here with electric. It's getting crazy.
Well, you won't have that problem down here for sure. And that's $700 now.
For what?
You guys have a great weekend.
Okay, you too.
You as
Thanks.
well. And safe travels when you're coming down to Florida. 877-927-6969, toll free into the studio. If you'd like to join the program, you're more than welcome. Of course, if you're not comfortable on the radio, I understand. You can always go to floridatalkrealestate.com, your one-stop real estate shop. You'll have access to the entire team, pros, experts in their field. You get them all at floridatalkrealestate.com. Remember, on Facebook and YouTube as well, consume and share. You can change lives, including your very own, with the pros at floridatalkrealestate.com.
Hey, thanks, Johnny. Just wanted to for the shout outs today. I want to say I finally put up the post because Nate shamed me. I forgot. Thank you, Nate. One of the loyal listeners from Facebook, or I guess watcher, Facebook, YouTube. I just put out the post on the Facebook page for the Knights of Pythagoras Mentoring Network for the donations to raise money for a new computer. Mike, you don't know about this. That group that we helped get the donation from the car and the food drive that we did a while back and clothing drive. We're trying to raise money for a computer for their podcast. Their computer is about dead for the kids. And I had a techie guy down here, and he told me the type of computer would be great for those kids to last a long time.
Cool.
So it's a Apple MacBook. I don't know if it's a Pro or Air.
You sure it was an IT guy to give you that recommendation?
Yeah.
Interesting.
Yeah. So why would you say that?
The Apple.
Oh yeah.
No.
So the bottom line is we're trying to raise $1,500. We put out the link. It's
Sweet.
an actual PayPal connection from the site itself. It is a 501(c)(3). It's been around 30 plus years. C. Ron Allen is the founder and organizer of the group. I've known C. Ron since 1987.
Yeah, we've had C-Ron on the air a couple times.
We have a bunch of times. So please help us donate and raise the money. We're trying to raise $1,500. Please go to that link and reach out. If you have any questions, please give us a call. That group is awesome. They impact the South Florida community in so many different ways with these kids.
And again, if you can hit share on there, you never know, because if just a bunch of people give $1, it goes really quickly. If you can hit share, man, you can help generate a few bucks. That'd be fantastic, because this is a wonderful cause. And again, these kids, they got a lot of passion for this, and Jim's got a lot of passion for the kids as well. It's about, trying to make sure these kids can continue to do this and do it right, because they're pulling it off with hamster wheels and things right now. So let's try to hook them up. And that's on the Facebook page.
Yes, it's on our Facebook page, Florida Talk Real Estate LLC. And it's our most recent post up there. So all you got to do is go there and click on the link. I don't want to be in charge of collecting the money or anything. I just want to try to point people in the right direction to help.
Totally.
Okay.
Totally.
So,
awesome.
So you have no questions. And 100% of the money goes to the kids in the operation. There is no money. When I used to be a newspaper reporter, there used to be these reports that you could see of how much money was going to the actual charity,
right,
versus the
administrative fees.
Fees.
Yeah.
Like, I've been getting a lot of calls from those law quote, and I'm putting these in quotes, law enforcement agencies asking us to help the law enforcement agencies. And most of those, when you look those up, like fraction of a dollar in pennies on the dollar actually go to the charity versus the administrative costs. So you just got to be really careful. This is 100% with C. Ron's group. He's been doing it for years and years. So let's talk about those kids. And let me tell you, those kids have to be totally dedicated, because they have a show every single. They got to produce. They got to line up guests. They got to figure out their interviews. They got to do the live show itself, produce it. There's a lot of discipline that's involved when you're doing something like this. Jim's saying with the broken
big time
with the headphones right now.
It's also a GoFundMe for Jim's
for
headphones.
Jim. You might want to help me buy headphones. I'll set up another account for that. So please, anybody that could help, I appreciate you helping them is helping us too, because it makes us feel good, and it makes you feel good when you help people. So try to do that. The other thing, I want to talk about reviews just for a second. Okay, so for the first time in 6 years, I got a bad review on Google. I was pretty surprised about it, because I did not represent the person that wrote a bad review.
Well, that's interesting.
So they really didn't like you.
Yeah. So what happened was, that's in this case, and there's is
that allowed?
So what happened was, and this is also a teachable moment for
Was it your
sellers, for
Was somebody
sellers
like you-
and for buyers.
Somebody going after your driving, they're like, he didn't use his blinkers.
So what happened in this case was the buyer bought the house, and then 3 or 4 weeks later, I get this really nasty email or text late at night saying that the buyer unexpectedly had to pay an HOA contribution fee, which means when you join a community, sometimes you have to pay an extra fee called contribution fee that's sometimes refundable, sometimes it's not. It's usually like what a quarter of HOA fee is, or a monthly HOA fee. It depends on each community. Well, my sellers did not disclose that there was a contribution fee. The title company, when they got the estoppel letter, which is the letter from the HOA stating is the house in good graces and what are the responsibility of the buyers, that didn't mention a contribution fee. But 3 weeks later, I'm getting this nasty email from the buyer who I did not represent saying that they wanted me to pay the contribution fee because my sellers did not disclose the fee, right? And I was like, that is not a realtor disclosure. That's a seller disclosure. That's why they call it the seller disclosure. And a mistake by my sellers for sure. And this is that happens where the sellers don't know all the rules and regulations in their community, whether it's an HOA or a condo. And if you don't give certain information, those communities to the buyer, it's a big headache for you.
Don't they get, I'm sorry, Rob, but don't they get like the buyers, don't they get some kind of like packet of the rules for the HOA?
And
was that in there?
I don't know the answer to that, but it was overlooked for sure by the property management company, which represented the HOA, the homeowners association, and both the sellers who were going through a very bad, I'm going to call it a split up. I called it War of the Roses when I was going through this. I was a court-appointed realtor, so it wasn't a happy time. This was a rough deal. And they mistakenly said that there was no capital contribution. So I went back to help out the buyer. I went back to the sellers and said, hey, look, you guys did an oversight. She's asking to pay. One of the sellers said they would pay half. The other seller said, this is all Jim's fault. He's the one that turned in the forms. They're the ones who gave me the information, right, that I turned in. They said it's all Jim's fault. Jim should pay it. I'm not paying it. So I got legal advice. The legal advice was, well, maybe you can get them to take away reviews if you pay the fee or if you pay half of it or something like that. And you know what I decided? I decided I'm a really good realtor. I care about people. I worked really, really hard on that case. And instead of trying to take away a review, I'm going to ask everybody that's listening to the show now to give me a good review, right? Give this team a good review. Not just me. I'm not asking you to go to my site. I'd like you to go and Google Florida Talk Real Estate LLC. And then on the right-hand side of the screen, you're going to see the Google reviews. I have more reviews on other sites, but I'd like to do this on Google specifically. And if you could just go over there and either say, hey, I'm a big fan of the show. I love listening, even if it's just that, not that you had to do a deal with us, but just let people know that we're legitimate and we do the right thing and you like listening and why. Or if you've done a deal with us in the past, go. Or just gave you great advice and you didn't do anything. Like Ross, you called out for insurance quote and Ross found out that you were good with the insurance policy you had at that time, right? That's a really big help to people.
Sure it is.
So if you could go to Florida Talk Real Estate on the Google page and give us some reviews, I'd really like to, that's the way I'd like to deal with this. Instead of trying to fight one negative review, let's overload it with positive reviews. So I hope you guys could help me out with that.
Yeah, it seems very doable.
Yeah, so thank you very much. And thank you for letting me go through all that. It was pretty upsetting because I haven't had a bad review in like 6 years. The last time I had a bad review, if you look up on it, that one's on Google review. And I forgot about that one. And that one was another buyer who bought a house. And the problem with they had was there was a porch. And when they pulled out some like screening for the ceiling, they found out that there looked like had been past water stains or something there. Now that was completely covered during the sale of the house. Their inspector didn't catch anything. Didn't show that there was any damage to the house, just that there had been past water damage at some point. And the guy gave me a really bad review saying it was my responsibility to tell them about problems, about something that was covered, hidden behind, finishes, and like blaming it on the realtor. And, you just get that sometimes. So I'd rather kill him with kindness. So please help me out. I appreciate it.
Thank you very much.
Okay. Why don't we go ahead and take a break, Johnny? On the flip side, let's talk about some good news. We're going to talk about insurance and what the good news on that insurance stuff is. After that, we're going to slide right into also another good news, the student loan program. The student loan forgiveness program is kicking back in again. And there's a lot of people that are going to be helped where their debt is finally going to be wiped out for good, Johnny.
Oh.
And we're going to talk a little bit about that program.
Very good. Lots to get into remaining on a Saturday. Thanks for being there. Always welcome to be a part of the program. Remember, it's toll free 7-927-6969. If you dial in right now, it's a quick 4-minute break. If you choose to do after the break, I really understand. And I do believe me when I say I understand if you're not radio. I'm still not totally comfortable on the radio. That's why I might lead you over to FloridaTalkRealEstate.com. You have access to the entire team. You're looking for a professional. If you're looking to buy a home, sell a home, stuck with a home, you don't know what to do, and you need somebody to give you some professional guidance, understanding you trustworthy aspect, somebody you know is giving you the real deal, go to FloridaTalkRealEstate.com. Write it down. Know it, use it, love it, share it. You can change lives, including your very own, with the pros at FloridaTalkRealEstate.com. We're back in 4 minutes. Thanks for being with us every Saturday right here on Real Radio.
We'll be your friend. Follow us at Real Radio 92.1 on Facebook, Instagram, and Twitter. Real Radio weather.
I'm CBS meteorologist Charlotte Carl. We will see a few passing showers later in the afternoon and evening. Conditions remain mostly dry throughout your Saturday, just cloudy. Not going to see a lot of sunshine tomorrow, though. Things change. We are going to be much drier and beautifully sunny with a little bit of a breeze picking up at times.
This report is sponsored by Compassion International.
Every day, a child in poverty waits for a sponsor is another day of hopelessness. There are thousands of kids who've been waiting over a year. End their wait. Sponsor a child compassion today. Just text the word radio to 83393.
Hey, it's your boy Johnny C here. Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys, of our listeners, any real estate need. They couldn't do it without their sponsors, who are experts in the fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar and get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I had for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm Inc., NMLS 189 MLD 78, Equal Housing Office of Paul A. Krasker, has been specializing in real estate law for nearly 25 years and has the professional team you need. Upside down with your house, Paul's team can help you conduct short sales, loan modifications, even if you're behind on payments. They also help you with foreclosure defense and bankruptcy. They can even help you get a student loan modification and repair your credit to get the score you need. Paul's full-service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road to claim title, that you can get the job done. Beware, all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
You're listening to Real Radio 92.1, and we are an iHeart radio station. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live at 1-877-927-6969.
Yeah, go ahead, dial in if you'd like. Questions, comments, concerns in the world of real estate. If you'd like to be involved with the conversation at hand, or you just want to bring something on the table here, you're more than welcome. 877-927-6969. Jimothy will line you up there, at least I believe he will. Is that true?
Yeah, hell yeah. We'll do it up. You keep me busy.
Nice.
Mm-hmm.
It's today's the 11th, right? We're live.
Sure
The
is.
11th day of October. Crazy. It's already
10-11.
Sanity.
That's a time dilation again for you.
Yeah, it's just, man. I did 21 Pilots last night, and it reminds me.
Wow.
It reminds me of a.
You got a lot of
That's a
experience.
lot. Man. The record's like 18.
18. You better step up your game. I'm older than you, Ross. You're in way better shape than. And it reminds me of a line. Days feel like the perfect length. I don't need them any longer, but the years seem way too short from a soul corazon. Way too short from a soul corazon.
Corazon. Nice.
Yes.
So which song is that? Because I don't recognize the lyric, but it sounds familiar.
Overcompensate is from the last album, Clancy.
Oh,
It's
no.
on the B-side.
I wouldn't have heard it.
Yeah. They actually they let off the show last night with it. They let off the last tour with it too.
Yeah.
Yeah. It's a
I would say
wonderful
I
song.
love 21 Pilots, but I really have only really listened to Blurry Face, which is a great
Well,
album.
you got a lot to catch up
I got
on,
a
man.
lot that I haven't listened to.
Yeah.
Okay.
The lure actually came to an end. Well, I shouldn't say an end, spoiler alert, because it doesn't quite end. But the lure, if you're aware, there's a lure to their albums.
Oh.
Like a fishing lure?
Yeah, like a lure. Yeah, a lure.
Like common
a
thread.
Yeah. Yeah, a story. Yeah.
A story is running through all of them.
Not every song, but from Breach from Blurry Face through Breach, their latest album.
You have to listen to it backwards, though.
You
Oh.
do, yes, in
That
double
helps.
speed, yes.
Okay.
Yeah, but I did that last night, and like I said, it reminds me very much of that lyric. It's
Okay.
just,
Yeah, I like that.
years just zoom by, man. Days are pretty good. Some days I'm like, I could use probably 10 more hours, but most days I'm like, that's pretty good.
It's good amount of time.
Yeah, good amount. Yeah.
When's the day over?
Yeah.
Right. Get to that point.
Actually going to Tampa right after the show, go see 21 Pilots again.
Wow.
You want
Wow.
to finish the story?
Hopefully. They didn't finish it
Now,
last
what
night.
about this, Johnny? I have a guy in my business group. His favorite band. He did a presentation, and they're like, "What's a fun fact that nobody knows about you?" And he said something like, he's seen his favorite band in concert over 70 times.
Wow, that's awesome.
Something like that.
That's
Now,
fantastic.
are you wondering what the band is? Is that the?
Can I take a guess?
I want to guess, too.
Yeah.
You're never gonna get it.
Never?
No.
Oh, okay. Because there's a few bands that kind of go. You got
Okay.
half.
Yeah.
Like the Dead.
The Dead.
Yeah,
or,
exactly.
My number one was going to be Pearl Jam.
Fish.
You were going Pearl Jam.
Yeah,
That's
I was
another
gonna
one.
go Pearl Jam.
There's
Yeah.
a lot of Pearl Jam folks.
Dave
21
Matthews
Pilots
Band?
is one too.
Right. I like all these guesses, but you're not going to get it. It's 311.
Oh, okay.
Yeah.
Nice. They have
Yeah.
a hardcore fan base.
Apparently.
Yeah.
Dude, their music's good.
311's awesome.
Yeah. Go back and listen to those
Like, get them like every summer.
90s, 2000, early 2000s.
I mean, it's another one where probably they had the one album that I would have known.
Here's a fun fact you can
stuff.
tell your buddy. He probably knows. Do you know what the name 311 comes from?
I see it on the clock face from time to time. Digital clock.
It's the police code for indecent exposure.
Oh,
And
interesting.
Peanut, the bass player, he came up with it, and they were like, "Yeah, sounds good. I like it."
He
Let's
saw
go."
it on his chart sheet.
were,
Exactly.
They were at the last Sunfest
I think you're right.
or the one before.
Nice.
I don't know if I or whatnot, but
Yeah,
I
they were at a Sunfest.
I
For
remember
sure.
Franny and I brought him out on stage. It was
They
fun.
didn't do Sunfest last year. Did they do Sunfest last year?
I think 2 years ago was the last one.
Yeah.
Isn't it with like an EDM festival? I think,
Okay.
if I'm not mistaken.
They just
Good
announced
draw.
that.
Yeah.
Seems to be a big thing down the south, Miami.
Oh, yeah.
You know,
That's funny. You just said the 311 thing, and being a former crime reporter is like that's not the 10 code for indecent exposure, right? So the 10 code
not
for
what they
indecent
charged me with.
exposure, 1076, but the
Oh.
311 law.
The law code.
It's the law
It's
code.
on your
It's not the
ticket.
10 code.
what's
for
a
police.
187, Jim?
Huh? That's a murder. Yeah,
Is that a 10
the,
code?
no, that's a statute.
Oh,
You know,
okay.
if you get a ticket for indecent exposure, it's going to be a 311.
Yeah, exactly. Because
Yeah.
that's the state statute that they're
Right.
using at the time. I was thinking 10 code though when you were saying that, because my favorite is
10-4?
signal 6. Well, there's two different kinds of codes for police, at least down here. There's the 10 code and then there's the signal code, right? So 10-4 is like okay and stuff like that, right?
Sure.
So they have that.
1099.
But then they have like signal 0, which means you're armed and dangerous. Signal 0, signal 1 means you're armed or something like
Wait,
that.
you're
Or-
armed and dangerous?
Yeah, one's armed and dangerous. The other one is like maybe a knife and not a gun. I forget. I don't know them all. But
Meaning the perpetrator is armed and dangerous.
yeah, you
Okay,
just say we
not
got
me.
a signal 0. So you're on the, you're going to the scene. It's like signal 0 at at this address. Blah blah blah. You're telling the cop, hey, be careful. There's somebody armed and dangerous there, or whatever. Right? Be on the lookout or whatever.
Huh.
What's the old TV show? Is it Car 54?
Car 54
Where-
years.
That sound right?
Where
yeah.
are you?
I think it is. It Car 54.
Yeah.
That's way
Yeah.
back.
Yeah,
where
that's
are you?
pretty old.
Johnny
So-
C is me. Mike Rowley, he's the mortgage guy from the mortgage firm. There's Ross Komarinetz with Brightway Insurance, Juno Beach, and of
Hello.
course Jimmy D, Florida Home Pros team.
Sorry about that.
Hey,
Are we doing a show?
wanted
So
to
much
yeah,
everybody
I
knows.
wanted to do a shout out to Nate. Nate just did a donation for the Knights of Pythagoras Mentoring Network to
Nice.
help raise the money for the computer. Thank
You
you,
rock.
Nate. Really appreciate it. Everybody else, please go to our Facebook page, Florida Talk Real Estate LLC, and go over there and click on the donation. I have it directly on the donation tab, but you can search around the site to get familiar with what the group is in case that's very important to you. And then go in there and donation page. And then if you could give a donation, Florida Talk Real Estate will be matching up to $750. So please, anybody that could go out there, that would be great.
Beautiful. Very much.
Okay. Next thing. Hold on, because we do have a lot of stuff today. Okay. So let's talk about good news, which is property insurance. Okay. So the reason why I say it's such good news is that the insurance industry has come out with a new report stating that they expect that if we don't get any windstorm damage coming between now and the end of hurricane season,
Knock on
they're,
wood.
they're expecting to get pretty hefty drops in insurance very soon. And there are some stats in here I thought that were kind of interesting. So the headline or the lead of the story was property insurance and brokers expect rates to continue falling into 2026 unless a major windstorm hits the United States before hurricane season ends November 30th. Meeting at an insurance leadership forum this week, past the midpoint of the season, senior executives said the sometimes double-digit rate decreases seen over the past year will continue as new capacity enters the market.
Double-digit decrease.
Right, and that's what we've been saying with
Pretty
Ross.
good.
That's why
Go
Ross
down
has been getting all
Over
these great
$99,
discounts.
somewhere between $10 and $99.
So not
Jimmy's
so
smiling. Timothy's smiling right now. He saved a good amount of money.
in
on the annual premium.
in the like other part of the states, we're like I've seen some 14% decreases.
Oh, percentage. That's good.
percentage.
I'm
but
sorry.
then
Yeah.
Oh, you were
You know,
thinking
kind
like
of
$20?
Yeah, we went
double-digit
It's
$10
annual
$89.
decrease. Yes.
That's funny. This side of the room, we're on dollars. You guys actually said
Percent.
percent.
Yeah, that's
Yeah.
funny. I didn't know why you guys were complaining.
Yeah,
I'm
'cause
like,
we're
really?
it could be like $10. What are we doing?
Or 99
Well,
on the high side.
and Jimothy saved about 60. I calculated. So if you don't mind, $62.50 a month.
That's great.
Right,
You could
just,
round
just
that up,
for
Jimothy.
changing it around. Now, did you
$69
wait
a
for
month.
your insurance policy to end before you got the new insurance policy, or did you do it early?
A little bit early.
Yeah,
yeah.
and
I
that's,
mean, we're still doing it the same day.
oh, okay, you're
Yeah,
doing it when it
yeah.
ends. But you don't have to wait until your policy ends, right, Ross? If you think that, let's say somebody say $1,200 a year, would it be better if they were 6 months into the policy to switch out?
Yeah, absolutely.
Yeah. So
Take advantage of the savings immediately.
Don't think you have to wait until the policy it matures before you do this.
I had a buddy of mine who I think Ross did it. He got his roof fixed after a prolonged insurance claim, and his insurance leading up to that was over $10,000 a year, and he then finally got everything sorted out, and he was able to go and shop for new insurance, and it was, at least half, or better, right? Cheaper.
That's $600 a month, guys.
Yeah.
Or $500 a
And
month.
so then the question for him was, does he wait for his policy, period, or does he do it immediately? And I said, well, listen, you're gonna get a prorated refund on your super expensive policy. You got to do it now. Like, get your new one in place now and maximize that prorated refund.
Might pay for the whole policy.
Yeah,
might pay for the new one and break even.
I said, don't wait. There's no reason to wait it out. Go ahead and do it.
What proration means, in case people don't know, is let's say that you have a 12-month policy and it started in January, and then you want to break the policy in June. Well, if you paid for the policy in full, you should get about 6 months back that you've already paid for that you haven't used. That's what called proration is. So it's all, so you can cancel early. A lot of people don't know. A couple other things. Did I see anything else that was in here? Oh, let me see. So they also said that let me see here, that they that even with the steep declines that we've already seen, that the companies are still very profitable, and they feel that if we don't get hit by a major windstorm this year, they can still drop insurance premiums and still retain a healthy profit. So
I'm hoping that narrative is we have it where we not having a major incident this year, we're fine. We're fine. Right?
You don't have to pay us this year.
Right.
You've seen it on auto too. It's both sides.
Oh, really?
Yeah, both home and auto rates are coming down because it was all lawsuits. So it was all the
it was same thing.
You have the combination of a quieter event year and the repercussions of the loss changes in the law.
So Ross, just speaking about car insurance, I got a new car recently, and my policy went from, if I read this right, like $4,400 a year to $2,700 a year. To me, that was like a huge, because the cars were about equally priced, right? I just thought that was a huge savings.
Shop us. Well,
Right.
Yeah.
Yeah. So go ahead and do it. All you got to do if you want to get a home insurance quote or a car insurance quote, you just reach out to us on the Florida Talk Real Estate page, right, Johnny?
It's that simple. Yeah. On Facebook, you can just reach out as well. But there's a contact page at floridatalkrealestate.com. You can call the hotline 888-973-7828. Just going to need some information from you so that we can get it all over to Ross and get you those quotes you're looking for. Of course, if you need any of the other pros, they're all there for you at floridatalkrealestate.com.
Wanted to go into, here it is. I was going to say, where is it? This is an article in the New York Times about what's happening with the student loan programs based on income-based. You're only talking about income-based programs.
That's the way
right?
it always was, right?
Well, there's a lot of other
government
programs too, but they're the income-based. I learned so much in this article from New York Times, and we've been dealing with this since almost since we began the show. We've been doing student loan things, and we've been saying that the student loan program's been out. This income-based repayment plan has been out since 2009, and nobody talks about it. And we've been using this program for so many people, right, Mike, to help them reduce their debt-to-income ratios so they could afford more home.
Just get them into a good program that's better than any other repayment option that they have on their loan, right? So it's like, get into the best repayment program that's going to suit you best and have the added bonus of the forgiveness at the end.
A full forgiveness at the end. And the way that this program, they called it the IPR program. I never knew what to call it. when we called it,
IBR?
we always call the student loan modification because I made that up. But it's called the IBR.
Income-based repayment.
Yeah, income-based repayment. But what I found out is that there's like 4 income-based repayment plans, and only one was approved by Congress, which was in 2009. So my information I've been saying all these years is correct, that the law was passed in 2009. It was passed by Congress, allowed public service to base their payment on the ability to pay, which is based on their income each year. And you just pay what you could afford based on the federal government's mathematical formula. And if you do that for 20 years, the payment is wiped out. Whatever you haven't paid is forgiven. Now,
so wasn't that, you said, I think you said government employees there, federal employees, something like that. So it's federal loans. So federally backed loans are the 20-year.
Thank you. Yeah.
If you're in public service, right? Some sort of public.
You would get 20 years.
10 years.
They had it at 20 in this.
So 20,
story.
I think, is for
20.
everybody.
I think you're right, Mike.
And then
I'm
the
sorry.
10 years, the public service employees.
But they're talking about the 20 years. They never even mentioned the 10 years in this article, which
so
I thought
the 20
was
is for
surprising.
everybody.
So one of the things I want to tell you, and I have notes in here, okay? So because I actually had to take notes on this. So the first thing I wrote was student loan program restarted. First note I wrote, very complicated. It's very complicated because here's the thing. The IBR, income-based repayment plan, is a law passed by Congress, and it's in there, and you can't change it because it's a law,
right?
Okay, passed by Congress. But there's 4 other income-based repayment programs that were approved by presidents, and they have been argued against as being illegal and upheld by the Supreme Court, that those were illegal because they weren't approved by Congress and the president wasn't allowed to create these programs. So what happened when the new administration came in January, they shut down all the programs. So all the people that were ready to cash out on their 20-year forgiveness, they stopped it and just said, we're not doing that. And it's been shut down for 9 months. So they opened it up again just for the congressional law one. And anybody that has that income-based repayment plan, it's up and running again. And you can, if you're scheduled for forgiveness, you can get the forgiveness. Now, here's the other thing that's complicated about it. When you are forgiven any kind of debt, that's technically considered income that you have to pay taxes on. So let's say you had $300,000 of student loan debt, but you only paid back $100,000 of it over the 20 years, and you have $200,000 that's forgiven. Well, then sometimes you might have to pay capital gains taxes on that $200,000, even though you never made the money or anything. It's money that was forgiven you owed. So they had a law that was passed for 21 through 2025 that if your loans were forgiven during that period, it would be automatically tax exempt. So it ends this year. So we've only got not even 12 weeks left. We got 10 weeks left. So they opened this up so that people can try to get this done before the end of the year so that the money is going to be forgiven. They get the tax break.
So if you happen to be one of those people where this was the year, the year that you've completed your 20-year payments, that's going to be put you in the tax exempt category. And I guess to be determined if they're going to extend that benefit.
Well, they said that it might be extended, like if you're due this year, but they don't give you all the paperwork until after the first of the year to get it forgiven. It might be retroactive. They're not even sure on that yet because there's no time, right? We got 10 weeks to fix all this thing that they've held back for 9 months.
Sure.
Right. So the other problem that they're having with that is, well, here's some good news. If you are eligible, you're supposed to be getting something in the mail telling you what your status is with your student loan program. Okay. And whether it's going to be forgiven or not, and the criteria for that and how that's going to work. Okay. They're saying you might be getting this stuff as early as October 21st. So anybody with federally backed loans, keep an eye out in your mail and open up your mail
Open your
because
mail.
you might be getting the Willy Wonka golden ticket.
Yeah.
Try to remember that we used to call it that back in the day where you got loan forgiveness. So maybe you'll get the Willy Wonka loan commitment. Now, here's the other thing you need to know. This is all way too complicated and way past my pay scale. I read that article 3 times. I was like, I don't think I could say it correctly. So we're going to get Paul Krasker in here on the 23rd in 2 weeks. He'll be in and we're going to talk about this. So anybody with student loan programs, keep an eye out when Paul's here. We're going to have some great information on that.
Excellent. Sounds good.
Okay. Let me see what else. Okay. That's the student loan program, property insurance rates. Oh, just to round out a little bit, something here. Trident Title. Trident Title has been a sponsor of this show since 2013. One of the best title companies, I think, in South Florida. But what makes them different, and one of the things I wanted to bring up, is that because Trident Title is connected to the largest title network in the country, that we can basically close almost anywhere. So it's a really big benefit to our customers when they use Trident Title for a couple of reasons. Number one, they're attorney backed.
That's right.
You don't have to have an attorney in Florida, unlike New York, where you have to have an attorney involved for title. Not down here, it's the Wild West. But they go to the higher standards where it's attorney backed. The other thing is that we close all over the country. We've had people closing in Michigan, selling a house down here, right? And just staying in Michigan, not having to fly down and all that inconvenience and cost.
That's nice.
And just get it done. We have a customer right now that was very ill and wasn't sure they could leave the house in order to do the signings. If they chose, we could have had a notary go over there and taken care of everything right there at their house. You could be almost anywhere in the country. I don't think we've ever not been able to close anywhere in the country. I remember in Georgia, we were in a really rural area at one time, and that one was a little tough because I think they had to meet like an hour and a half into Atlanta.
Yeah.
But it was much better to drive the hour and a half there and back than it was to get on a plane, fly down here, and do all the closing down here.
For sure.
So Trident Title, just want to give awesome shout out to them.
Yeah.
And say that. Let me see.
Remember, FloridaTalkRealEstate.com. You have access to the entire team. This is a wonderfully put together team over the years of pros. These are experts in their field. You get them all one click away at FloridaTalkRealEstate.com. On Facebook and YouTube, consume and share. You can absolutely change lives, including your very own, with the pros of FloridaTalkRealEstate.com.
What we're going to do is we're going to do a little taste about mortgage rates right now, Mike, only for 3 minutes. We're going to take the break in 3 minutes.
Just a sample.
We're going to just do a little sample bite, okay, and talk about that. Because that's going to slide in. Yeah, that's going to slide into what national experts are predicting is going to happen with the economy and interest rates and the housing market. But I thought we would start off with interest rates because you haven't really talked about it that much. So, Mike, we're at 6.3%. We went down last week, 0.04. Ironically, the week before that, we went up 0.04. So we're back to 6.3, which we were 2 weeks ago.
Yep.
These are the lowest rates we've had in the year since January. These are the lowest rates we've been experiencing by about 0.5 to 3/4 of a point compared to the rest of the year. So everybody waiting for that mortgage rate drop. It's here. It happened. Hasn't really gone down much over the last 3 weeks, but we are at the lowest rates. The other thing that was a little disappointing to me, it has a little bar for the 52-week range in the Freddie Mac report. And like right now, the 52-week range average was between 6.26 of the low over the 52 weeks, 7.04 is the high. Now, 2 weeks ago, the 52-week average started at 6.08. So it went up almost, went up 0.2. So I was like, so the interest rates over the last 52 weeks have been rising up compared to that 6.08 that we got sometime earlier last year. So
that was September 26th.
September 26th, 2024
went down to 6.08.
Yeah. So we just, so that was the lowest in the last 15 months or so. And, well, I guess not 15 months, I guess 13 months or something.
And remember, that was election year last year, right? Is that right?
Mm-hmm.
September. We're leading into
Yeah,
November.
that's right.
Yeah.
Yep, that's right.
So there was a lot of
turmoil,
uncertainty,
turbulence. turmoil. There was
not
a lot
turmoil, but
choppy waters is what I would call it.
What
It
does
was a lot of
future
up and
hold?
down, up and down. We were
Yeah.
yo-yoing. This trend this trend has been lasting. This downward trend and not really going up at all has been since January. The rates have been slowly going down for almost the whole year now, right? And people just really haven't woke up to it. It's still a very sluggish market as far as activity. And we're going to talk a little bit about that on the flip side.
Excellent. We still got an hour remaining for you on a Saturday. Thanks so much for including us on your weekend plans every Saturday. And of course, you are welcome to be a part of the conversation. Don't be shy. 877-927-6969. If you dial in right now, quick 4-minute break. Jimmy's got some little breakfast fare over there. He'll get you some bacon or something while you're on hold. Is coffee still warm?
How about a nice big sausage?
You still got sausage over there?
Yeah, damn right.
You're such a fan of it. I thought it would be gone by now.
That's all right. I saved them for you.
You're the best.
Weird watching you eat it. You don't chew it.
21 pilots
in a row. Thank you for being with us. FloridaTalkRealEstate.com is always there for you. Remember it, know it, use it, love it, share it. You can change lives, including your very own, with the pros of FloridaTalkRealEstate.com. We're back in 4. Thanks for being there every Saturday right here on Real Radio.
The visual aid you need for all the freaky stuff we talk about on the radio. Find it at realradio921.com. Here's what's happening with the weather on Real Radio.
I'm CBS 12 meteorologist Charlotte Carl. While we will see a few passing showers later in the afternoon and evening, conditions remain mostly dry throughout your Saturday, just cloudy. Not going to see a lot of sunshine. Tomorrow, though, things change. We're going to be much drier and beautifully sunny with a little bit of a breeze picking up the trees.
This report is sponsored by AutoZone. Get in the zone. Starting stronger starts at AutoZone, where they've got battery solutions in the form of free battery testing, free battery charging, and replacement batteries that fit your needs. That's what makes them America's #1 battery destination. Get in the zone. AutoZone.
Hey, it's your boy Johnny C here, host of Florida Talk Real Estate. They're tops when it comes to helping people buy and sell houses. But Florida Talk Real Estate is so much more than that. For 5 years, I've watched these guys help thousands of our listeners with any real estate need. They couldn't do it without their sponsors, who are experts in their fields. Check it out. Jim DePola, powered by Keller Williams Realty. Their team specializes in helping people sell their house for top dollar, and buyers get great deals on the purchase of their home. That's what they did for me and my family, and I couldn't be happier that I hired them for my real estate transaction. Mike Rauch from the mortgage firm is one of our favorite guests on the show, and he is the mortgage guy. Whether you're looking for a refi or a mortgage to purchase a new home, Mike Rauch will get you the answers you need. The mortgage firm is licensed to do loans in Florida, Alabama, Tennessee, and Georgia, and they have local offices that cover all of South Florida. So if you're thinking about a refi or a new mortgage, go to the mortgage guy, Mike Rauch, and find out what he can do for you. The Mortgage Firm, Inc., NMLS 189233, Florida license MLD 78, equal housing lender. The law office of Paul A. Krasker, 5 years, and has the professional team you need. Upside sales, loan modifications, even payments. They also help you with foreclosure, bankruptcy. They can even help you get a student loan modification and repair your to get the score you need. Paul's full service team has helped thousands of our listeners, and they can help you too. Trident Title LLC is the largest privately owned title company in Florida. When you need a title company to complete a refi, home purchase, or sale, Trident Title has got you covered. Not only do they offer competitive pricing, Trident Title has attorneys on staff to make sure if you have bumps in the road to clearing title, that you can get the job done. Beware. Not all title companies in Florida have attorneys on staff. Trident Title does and complies with all the new federal regulations released last year. Ross Komarinetz, owner of Brightway Insurance, has been helping our listeners get great rates on homeowners insurance plans. Haven't checked your homeowners insurance policy in a while? This is a great way to help reduce your monthly mortgage payment. Ross can also help with renters and auto insurance. Ross is only a phone call away and can usually get the answers you need same day.
Call Ross today at 561-425-6228 or drop by his office at 873 Donald Ross Road in Juno Beach.
So now you know why I'm happy to be part of the Florida Talk Real Estate Show, the longest running real estate show in Florida. And all these sponsors are just a phone call or a click away. Just call 888-973-7828. That's 888-973-7828. Or go to floridatalkrealestate.com. That's floridatalkrealestate.com. And don't forget to use the most accurate search engine to find your new home or ask for a free home valuation because floridatalkrealestate.com has you covered. That's floridatalkrealestate.com.
From the Anajar and Levine Accident Attorney Studios.
Have you been in an accident? Call Anajar and Levine Accident Attorneys at 1-800-747-FREE.
1-800-747-3733.
Real Radio 92.1 is WZZR West Palm Beach, an iHeartRadio station.
Make us the #1 preset on your car radio and on the free new and improved iHeartRadio app. Listen for all your music, radio, and podcasts. Free never sounded so good. This is Florida Talk Real Estate with Jim DePola and Johnny C. Got a question for the show? Call us live. 1-877-927-6969.
Still got about 54 minutes remaining on a Saturday for you. You're welcome to dial in 877-927-6969. If you have a question, a comment, concern in the world of real estate, you want to get involved in the conversation at hand, red carpet's out for you. Jimothy's our producer extraordinaire, and he's doing well, I assume.
Yes, I am. Thank you very much, Johnny. Hope you are as well.
Dude, I'm so good. Thank you very much for asking. Johnny is me, your old buddy, your old pal. Mike Rauch, he's the mortgage from the mortgage firm. He's right there.
He is. Hello.
And if you don't believe me, you can join on Facebook or YouTube, Florida Talk Real Estate on both. You'll see Mike Rauch.
Oh, they're thinking you're doing my voice.
Yeah, I'm like Jeff Dunham over here. Yeah.
Nice.
Yeah.
Could you do my voice if you had to?
I'm not great with
Not
voices.
Yeah.
Yeah.
Me neither.
Yeah.
How about any of us? Who's the best?
With the voice guy?
I'd like to hear Jim's impression of Mike.
I'd like to hear Jim's impression of Mike. Was that good?
That was
more like
not a
mocking.
great Ross.
Yeah.
He was trying to do Ross Komarinetz with Brightway Insurance, Juno Beach. Yeah, I think he failed pretty massively, actually. Yeah.
I don't know. As a person, you don't know what you sound like.
Yeah, because what you hear is a little different than
Because when you hear
listen
yourself
back on the radio,
on tape or whatever, you're like,
"Oh,
that's what I sound like."
We've all been taping ourselves for like 10 years, 13 years. Do you ever listen to the show? That's the question.
Yeah, so I've this radio station so much that I've heard my own voice so many times. It still kind of creeps me out a little bit. I'm like, it's
who is that guy?
I don't like it either. Yeah, I get so sick of it.
Yeah, Jimmy D is right there. It's our fearless leader. He runs a top producing Keller Williams team, the Florida Home Pros team, Keller Williams Innovations. Not a fan of your voice.
Not a fan of my voice, but I am a fan of giving out information to people, and it makes me feel good. So that's why I do it.
Yeah, it's easiest to use your voice.
Yeah.
We can do it in sign language.
Yeah, I was gonna say sign language, so that we don't. First of all, I'll just say thank you, Nate, for doing it. The Pythagoras Mentoring Network, KOPMN.org. It's on our Facebook page, Florida Talk Real Estate LLC. Please go there and donate. It is a 5013C. We're trying to raise $1,500 to get a super duper computer that will last many, many years for these kids who have been putting out a past about local events and local leaders for years now, and we want to support them. Their computers so old, it's like not working right anymore. So please help us by doing a donation to KOPMN.org. Just go to our Facebook there. Also wanted to say thank you everybody that's doing Google reviews right now. I'm not going to get into it right now, but we just picked up 3 reviews from people. We'll get into a little bit later. Just go to Florida Talk Real Estate on Google and write a review about us. Tell people why you like listening to the show every Saturday or listening to the reruns. And if we've helped you buy a house, sell a house, invest in a house, refi a house, get a mortgage, get an insurance policy, get title work done, get legal work done, anything that we've done
Or if
for
you
you in the
just
past.
enjoyed the show.
Yeah, or if you just like the show and you find it entertaining, please give it a review. We would love for you to do
If
that.
you find it infotaining,
Infotainment, that's what we try to
I
do.
sure
it.
hope so.
I call it, yep. And so we were talking about interest rates just a little bit ago before the segment break, and we're at 6.3% for Freddie Mac 30-year mortgages, which is where we were 2 weeks ago. These are the lowest rates we've seen all year, which is great. But how is that affecting the real estate market? And what's very surprising about that, and I found this out yesterday, was the annual sales going back to 2005, which was the peak, right, of sales, of all-time peak, until today, right? So they went back 20 years, right? And these are the things I found out that were interesting. I had no idea. I didn't know how many houses were sold in 2005, which was an all-time peak ever, okay? And it was 7.08 million homes were sold in 2005, okay?
Raise your hand if you bought a home in 2005.
I did.
2006.
Yep.
No,
Oh, 2000. Well,
2006, yeah.
2006 was still a pretty strong year. We were at 6.52, okay?
Actually, technically, I was 2006. It was new construction. We closed in 2006.
Oh, 2006.
Yeah. It was built in 2005.
So 7 million is the peak. And then the worst of it, and this is the thing that's very surprising to me, we're actually lower than we were in 2008 through 2012 when we started this show. And I was like totally dumbfounded by that. So
lower to now in
less sales, less
like
home sales
this year
for the last couple of years. For years, okay, we've been having lower sales than the worst of the real estate market. People go, oh,
that's crazy.
So let me go over this. 2008, we went from 7 million in 2005. In 2008, 4.12. Then we jumped up just a little bit in 2009 to 4.34. That's because some investors got back in the market, were buying too early. They should have waited a little longer. 2010, 4.18. Okay. And then 2011, 4.26. And then we started going up in 2012 when we started the show. That was like the beginning. That was just the beginning when we started moving up again. And then we got up to, by 2018, we got up to 5.5 million. The highest other than that 7 million in 2005 was 6.12 million units in 2021, COVID. That was the COVID boom. So we had the boom, the regular boom that created the financial crisis, 7 million units sold. And then the COVID boom, 6 million units sold, a whole million units less than the 2005. So 17 years later, we're still not hitting that 7 million. That just shows you how frothy things were in 2005 with those dirty mortgages. But here's the more interesting. 2024 and 2025 right now. I'm sorry, 2023 and 2024. 2023, 4.09 million. 2024, 4.06 million. The low during the crisis back in 05 was 4.12. So we're 300 to 400,000 homes less sold than the worst of the real estate market after the crash. How surprising is that?
I'm surprised by that, but maybe it's just a normal number, like that 4 million.
No,
zone.
normal is about 5 million, Mike. Just
Okay.
like
So you've seen that. So in that span, 5 million has been more common.
Let
than
me
4.
just read for the
Okay,
years. Okay,
yeah.
starting 2013, 5.09, 4.94, 5.25, 5.45,
Okay.
5.51, 5.34.
Okay.
5 is normal.
Yep.
Okay.
So I would be on board being really kind of surprised, but so too many people have been completely destroyed by those COVID interest rates.
Yes.
Completely
Yes.
destroyed.
Yes.
Like the reaction to a 6% interest rate shouldn't be what the reaction to a 6% interest rate is. And it's all uniquely because of a couple year span. And that's the only reason I'm kind of surprised by it. I think if you eliminate that poisoning of minds, I think we're probably above the 5.
I think it's a combo of where the rates
pricing,
are and the prices.
Yeah.
So
I think
housing
that
prices,
matters.
especially like we're not insulated here, but we are South Florida, and so housing prices are.
But those are national numbers.
No, but I'm saying down here it feels like it's very expensive to buy a home, right? So when you combine the interest rate with the price of the homes, and it's like, well, how do I get into a payment that I can afford? Just everybody's question. I guess that's an all-time question, right? I remember my first home I bought, that same question came up, right? Income, what's my budget and everything. But
Sure.
yeah, it's definitely feels, at least down here, like these price, something's got to give.
The national comments say that we should see a 20% drop in home prices in order to make it affordable for most markets. We'd have to see a 20% haircut.
Yeah, but I think
so if we're at
that's probably
650
over
right now. So if we're at 650 right now, roughly, okay, I'm just making round numbers. We're probably at 625, but at 650, you'd knock off 130,000 off of 650. So that's what, 520. So 650 homes have to, if they were priced at 520, that would be the affordability number. What were you saying? Russ? I'm sorry.
I thought they were predicting like they would come down 20%, not just.
No,
it would have like they're just saying
They're saying
affordability is
if it
20%.
No, in fact, we're going to get into that in a second, but the exact opposite is what they're expecting. They're not expecting prices to drop. I'm just saying that they would have to drop 20% to be quote affordable, according to economists.
I'd be curious if you did the other side of that, and so instead of thinking about prices coming down 20% to make it affordable, what about how much would income have to increase to make it affordable? So I think we should just focus on making more money and not so much about the cost of your housing.
Yeah, make
right?
more
I like
money.
the way you think.
Right?
Yeah, just make more money, right?
Can we just boost it? Like, would you? Is the 20% equivalent? Boost in income sufficient to make it affordable?
Well, what percent is the focus, or should be the focus? What percent of your income should be for your mortgage obligation?
Oh,
geez, you mean like from a qualifying perspective
No,
or from
but
a
just
budget perspective?
what they say should be your
conventional
ideal
wisdom.
budget.
Do you hear this
Conventional
30?
wisdom.
Yep.
33% number, you hear that kind of thrown around
So-
of your
so-
gross.
So think about what 33% of your gross is in the reality. If you're buying a $650,000 home at 6.3%, that you have to make a really, really substantial income for that to be 30% of your income.
Yeah, and it's like that 30% is lower than the qualifying ratios.
Sure.
So you can go up to say something like 45 or 50% of your gross.
Right?
And those,
and I think that's more reality for a lot of folks.
and those ratios are set based on risk analysis, and so they allow that because people aren't defaulting in large numbers at those ratios, right? So they're people, essentially those loans perform, therefore people are able to do it.
Yeah.
Right. They just kind of figure out how to make it work. And so
we're good at stretching ourselves to our
the 30 something sounds, idealistic, but it's hard to get that number.
It is hard to get
it's
hard to meet that number. Yeah.
And
unless we start making more money.
Or make more money, or you can decide what lifestyle that budget affords, and as long as you're willing to accept whatever that is.
True.
Then that could be you're taking a house that's less, smaller than you want, or in an area that you don't, all of those things. So it's kind of like, well, what does it take to really live within that number?
Mm-hmm.
I mean, people do it. You said people got like spoiled, I think, by those interest rates, but a lot of people got into those low rates and have achieved that ratio.
Yeah, that's a hard thing to get out of too. You're like,
which
I don't
also
want to leave that.
Yeah, I don't want to leave that. I don't want to. I talked to somebody today who was considering a cash out refinance. Whatever, debt consolidation, got some projects they want to do around the house, but they got their first mortgage is sub 3%.
Oof.
Right, and it's like, well, try and do something other than a cash out refinance, like,
right?
Second loan, something. Just because it's like you hate to replace the big majority of the money you have that you owe with a higher interest rate. Like you would never do that unless you were kind of circumstances dictated, you must.
You might be able to get a personal loan better than 6.3.
Yeah, I mean, it's hard because you're going to personal loan at 12%, and so that sounds like hard. But
money,
when you talk about the big portion of the debt at the low interest rate, financially makes sense.
So, just to get back to these stats real quick about what they're predicting to happen by the end of this year and what's going to happen in 2026. So, this group of economists. So last year we only sold 4.06 million units, homes in the United States. It's the worst. It's the worst in 20 years was 2024. Okay. Now, what they're predicting this year is that we're going to have a slight increase from 4.06 to 4.24 million units. It's negligible. And what do you think they're predicting next year? Because, I talked to a lot of people that are already looking forward to next year, potential sellers, potential buyers that have their opinions of what's going to happen in the future in the next few months. So what do you guys think is going to happen? Like, as far as these economists predicting, are we going to have higher sales, lower sales? If we know that 5 million is the average, 7's the high, 4 is the low, where do you think that they're going to be for next year? Yeah.
I think I'm optimistic. I'd say, I would say rates come down a little bit and sales go up a little bit compared to this year.
Yeah, I would say it stays below 5 million, but a little bit closer to 5 million than 4 million. Yeah.
How about you, Russ? Same thing?
Yeah, same thing. The rates will come down, but I don't think we're just going to go to 7 million.
Rates are going to be 3.7%.
Yeah. So they're predicting a modest increase compared to this year. So they're thinking that we're going to end this year at 4.24, and next year we're going to go up to 4.54
for total
million
sales.
for total sales, right? Which is still 10% below the average over the last 20 years. It's 10% below.
Okay, but
so
they're
not
not increase in activity.
Slight increase, which gets us into.
But we've seen. So correct me if I'm wrong. Like clearly these are tied together. I know you've talked in the past about people are staying in their homes longer, right? And there's reasons for that. You're seeing like generations come together, multi-family type situations where maybe mom's bringing the kids back in or vice versa. That's ticking up a little bit over the last few years. People with the lower interest rates motivated to stay in their homes. So as people stay in their homes longer, inherently our sales numbers are going to kind of level off or stay lower, aren't they?
The only problem with that is there's a lot of people that historically, based on age and circumstances demographically, that they should have bought already. So there's a lot of pent up demand.
Yes.
So there's a lot of people that are holding, like you're right, there are a lot of people that are holding because they're tied to the interest rates, or they just don't want to move, or their lifestyle's changed and they're reconfiguring their houses, let's say, to have a multi-generational.
Yeah.
But just as many of people of those, there's a lot of people, maybe not just as many, but there's a lot of people that should have bought already that haven't. So I feel like they kind of offset each other somewhat.
I agree with that, Jim. I think that there is, I heard a term that caught my attention. It was funny. It was a stay-at-home son. Or the stay-at-home daughter,
I
right?
heard
Like you
about that
got
recently,
a stay-at-home son, right? So I think there's a lot of stay-at-home children, young adults that are, ready to enter the housing market at some point, right? Maybe they're in their mid-20s and they're still at home, or they're in their, finished college, came back, and like they're getting their career started. So I think that still exists, Johnny, and that could drive who's buying.
Yeah.
Well,
right? Who's buying? But to your point, who's selling? Right? There's always going to be that dynamic.
I do see one little potential bright spot in all of this, right? As far as more activity. You know what might get them, and I've been waiting for Mike to come so I could ask him this question. FHA is talking about changing their rules to allow condos to have low down payment loans, like the 3.5%, that they're going to open up FHA to more condos. Have you seen that? They're actually talking about that in the minutes of the meeting with the board for FHA.
There's no rule against that right now. So you could do FHA financing on a condo.
But they're relaxing some of the restrictions.
They might try to come more in line with what Fannie and Freddie do as far as condos, which is there's basically a kind of they have guidelines. So when you buy in a condo, we talked about this before. Not only do you have to be approved as the borrower, where there's some sort of underwriting analysis. When you're buying a condo, there's an underwriting analysis on the condo community itself. So they're talking, general financial health of the condo, and then structural integrity, insurance requirements, things like that. So FHA has always been the strictest as far as getting a condo approved so that you can do FHA financing. So they have always had a process. It's a major undertaking to get a condo approved, and their guidelines are more strict than they are on conventional financing. So if anything, they're going to be relaxing their guidelines or just coming more in line with what the other guys are finding financeable, right? So Fannie and Freddie who are doing, 90% of the condos, if you're doing financing, why is FHA more restrictive? Of course, they got burned in the past, right? Like when we had the condo crisis, or the housing crisis, FHA really got burned, meaning they had to pay out a bunch of insurance, right? Because people defaulted. That's what FHA is, a mortgage insurance operation, essentially. They had to pay out a lot of claims, right? Because of condos. So they tightened up on condos, especially down here in Florida. So yeah, I could see them relaxing that a little bit and coming. So, they're basically deciding they want a bigger chunk of the condo pie. And
this could be a huge benefit to first-time home buyers, right? To a huge benefit, because now if they could do 3.5% financing on condos, and that there's more of them available, you can do that now, but the condos have to meet a certain criteria, and most of the condos are not meeting that criteria, right? Would you say like 95% of the condos out there don't meet it?
It's not that they don't meet it. It's just the process of getting it approved for FHA financing is much more arduous than it is for conventional. And so you can do a conventional low down payment. Like you could buy a condo with conventional financing as low as 3% down, right? You could do 3%, you could do 5%. You do not have to come in with 20 or 25%, depending on how.
But realistically, in real life, Mike, how many times have you and I worked with a customer
where it's like you can't do low down payment?
Right. I mean, most of them are like, no.
So that has slowly
and then you
been
got to
getting...
keep looking. Okay, we'll go to the next community. We'll go to the next community.
Yeah.
But if that opens up, what I'm trying to say is, if that opens up, and it relaxes more, there are so many first-time home buyers that now can really afford to buy something where they couldn't before. If you're on a budget, let's say $200,000 or less, right? Those people are going to be able to have huge opportunities. And here's the other thing, is that the sellers are going to have a good benefit because those property values are going to go up on the condos.
Yeah.
And the other thing that's going to
goes up,
happen, right, because the demand's going to go up. And the other thing is that's going to be good is because of all these laws about the milestones to make sure that your buildings are kept up to deferred maintenance or taken care of for safety issues, and that the reserves are taken care of, and the condo people are trained better so that they know what their ethic requirements are and stuff like that.
Right.
Like having all that together just makes it better for the condo market in the long run.
Yeah.
And more of these condos are going to be approved by Fannie Mae, Freddie Mac, and FHA that couldn't before.
I will just say this, like FHA is not going to get looser on their guidelines than Fannie and Freddie. So if you're looking for low down payment, if it can't go conventional low down payment, it's not going to be able to go FHA low down payment, right? So it's not like FHA is going to approve a bunch of condos that you couldn't do conventional low down payment, right? So they're going to like line up. But for the average person, there's reasons where you might do an FHA loan versus conventional, even if you're low down payment. It's not always just based on the down payment. Sometimes it is. Sometimes it's credit. Sometimes it's DTI, like all of that. So the point is, it's going to people who should be doing an FHA loan for whatever reasons now, and they're at a price point where condos are in play now, as FHA loosens up a little bit, hopefully, they'll have a lot more options on the table. Yeah. Where right now you would basically say, if you have to do FHA, you're going to eliminate condos. Like for the most part, you're eliminating condos from your search.
Yes, you pretty much
townhomes, villas, manufactured homes. I'm talking on the lower price points. Well, if condos open up, there's a lot of inventory of condos that would become available to, and it's, you say first time home buyers, but essentially it's just, low down payment home buyers, primary.
And any condo board people listening right now, or people that are really active in their condo communities or anything,
You want
if you
to be
guys
approved.
if you guys are not approved,
Yes.
if you guys are not approved, you guys are making such a big mistake, and you're hurting so many homeowners in your community, Mr. and Mrs. Condo Board people.
Yes.
Because by having those availability, it opens up to a bigger pool of buyers.
Oh yeah.
Which means you have more demand, and because it's so hard to find condos that are approved for these types of loans, you being one of those makes your place more valuable.
Yes.
So it really hurts. I as a realtor watching what happens with this stuff, I'm just like amazed. It's like, this is such an easy thing to fix.
It's also
it.
it opens up one thing we don't talk a lot about, but it would open up reverse mortgages to a much wider audience.
Oh yeah,
right?
that's true. Which would be
reverse
huge.
mortgage traditionally is an FHA product, and so like reverse and condos don't play nice together right now, and that's like hard because there's definitely a lot of the
People
older
that need it.
population who have these condos where they don't have mortgages, they got a big equity position, they're not ready to sell. Like that's their place, that's where they're going to stay.
Right.
And the reverse mortgage is a great instrument for kind of tapping into that equity without having a payment obligation. Now I do have, Jim, I don't know if we talked about this, I do have a non-FHA reverse product available. So if you're in that position, we can look at it, right? So even if it's a condo, traditionally FHA is going to, reverse is going to be ruled out because it's an FHA product. I do have a conventional product. I won't say conventional, but a non-FHA product that's available. So
I feel like there's an interesting hurdle because I'm going to associate it to my own experience when we were buying and listening to the show for 13 years. So some realtors view like a VA or an FHA versus a conventional loan offer as less than, right? Because there's not as much skin in the game. They maybe don't have the money. Like it's not across the board, but I know it still exists where it's viewed as a less than offer versus a 20% down conventional offer. Do you think that poisoning, that thinking can be overcome if these condo boards are thinking, well, if we open it up to 3.5%, we're welcoming in the riffraff, right? And I'm using that so
it's true.
Antiquatedly thinking.
We're
opening it up to the riffraff, the people that we don't want in our community, and that's a tough thinking to overcome. That doesn't mean these aren't wonderful members, neighbors. These are just people that are going to take advantage of lower money down to get into the community. But don't you think that's a big hurdle for these board members?
Yes, and what I meant, that's true. I don't mean it's true about the opinion. It's true that they have the opinion.
Yeah.
Okay.
And I think it's an antiquated way of thinking.
Yeah, and the reason why that is because of the last real estate crisis we had. There were a lot of foreclosures and a lot of people weren't putting skin into the game and they were getting these dirty mortgages, but it's not the same anymore. We're not seeing dirty mortgages. I mean, I always joke, you gotta give a DNA test in order to get a loan in today's market. It's very hard to get, although I am seeing on commercials now non-qualifying mortgages out there a little bit more. It's like, oh my God, it's starting to come back. Yeah, it's like, but I haven't seen it enough yet, right? But if we get into a really bad economic downturn, people are going to be looking at those to do refis and stuff to grab their equity out of their homes and stuff, because I think that's the next thing. Is the one thing that's different about this market that was different about the last market where we had a crash. Last market, everybody was highly leveraged and using their equity from their homes and properties to do more stuff. Now everybody's been holding tight. You're not really seeing that many cash out refis compared to years past, right, Mike? Are you seeing more lately?
I would say it's starting to pick up just because I think people have the equity. Maybe they're just, debt consolidation. Usually debt consolidation means, hey, we have this other debt that we've kind of like accumulated. We need to figure out how to get a lower monthly payment, right? So, you start to have conversations like that. And especially, it could be related to like the news cycles, right? Like, hey, rates are coming down. And so someone who's been thinking about refinancing maybe is like, okay, is now a good time? Have we had the kind of movement and rates that we need? And so, I'm having those discussions, Jim. I think people definitely are spending on credit. Like, it's
more.
So you're seeing that. And the good news is equity positions are there. And if you had to bite the bullet and take a higher rate than your current one, maybe it's not so painful to do that. Not economically wise, but maybe for your monthly budget or whatever, it's going to make the most sense.
Let me just talk about these two other articles that are related to all this. One of them is the Fed meeting where they dropped the rate a quarter point. They're going to be meeting, I think, next week. They're meeting again, and then they have one more meeting for the end of the year. And what was really surprising about the notes of the meeting when they decided to cut the rates, it was a unanimous opinion to cut the rate a quarter point, but one of them voted against it.
He wanted 50
because he wanted a half point cut, right? So
is it really unanimous?
So in my opinion, it is unanimous because everybody agreed everybody wanted to cut. Just how much were you going to cut? It was only one guy against the other 12 or whatever
he just
it was.
Wanted more.
Yeah, he just wanted more because
he's the newly installed.
Yeah, he's the newly appointed one, right?
Yeah.
So here's what I thought was really interesting in this. They weren't talking so much about unemployment, although they're worried about unemployment because it is scooting up just a little bit. It's inching up.
Yep.
And after the government shutdown, it looks like that's going to continue because they just laid off 4,000 people yesterday. So we'll see what happens with that. But so this is the thing. Several participants noted weakness in the housing market, and a couple of participants mentioned the possibility of a more substantial deterioration in the housing market as a downside risk to the economic activity. So that's like Fed term for, hey, I think we got a problem coming.
Huh.
That they're at least they got an eye that it could become a problem, right? So what they're saying based on this is, so they're a little worried. They're a little worried that if they keep some of the people are worried that if they keep continuing to cut the rates. Right now, we're at 4% to 4.25% for the Fed. We got as high as last year, I think we were as high as 5.5 or something at that point, right? Now we're at 4 to 4.25. The guy that wanted to drop the rate a half a point, he'd like to get us to 2% for the Fed rate as quickly as possible. But there's some other Fed members are very worried about that because they're afraid that if they do go down to the 2% and we have an economic jolt in the negative way, we won't have any room to fix it. What people forget is when we had the crash in 2005 with the real estate market crash, we were at 6.25% or something. We were over 6% on the Fed reserve rate. So when we had this massive thing and we went down to zero, we had all that room from 6% down to zero to try to offset the problems we have with the economy. But if we're at 2% and we have a jolt, there isn't as much room to play with at that point. We're kind of vulnerable is what some people are worried about. So that's what the Feds are saying. And then Fannie Mae came out with a report, and Fannie Mae said this. So Fannie Mae came out with a whole bunch of different stuff. So let me, okay. So right now, what they're predicting is that the interest rates, where do you think they're predicting the interest rates are going to end this year? So in the next 10 weeks, where do they think Fannie Mae think is where the interest rates are going to be? We're at 6.3 right now.
6 flat.
6.25.
Yeah, I was going to say stay more or less where they're at.
Yeah, they're thinking that it's going to be 6.4. We're at 6.3 right now. They think we're going to end the year at 6.4. And where do you think where do they think we're going to be at the end of next year?
Why would it move much? I'll stay 6.4.
But they also they predicted prices, total sales to go up. They must be predicting some sort of downward movement in rates. So
only 5.9.
Okay.
Which basically between 5.9 and 6.3 where we are right now, that doesn't really affect most people's debt to most people. That isn't going to be a make or break decision about whether they could buy a house, whether it's 6.3 or 5.9. Am I wrong about that, Mike?
No, you're right about that.
Right. So it isn't, it's going to make an impact on your mortgage payment, but not enough where it's going to really affect whether you could buy or not for most
unless you're
people.
pressed right up to the
Unless
limits,
you're right at the upper limits. Now, here's the other thing. They think that
that must be something that's telling you something about what they predict the Fed's going to do too. Because even though we know the Fed rate isn't tied to mortgage rates directly, there is a general trend. They kind of followed the same trend. So if they're predicting more or less the rates are going to stay the same, I'll call it, right, within a quarter of a point or so, or within a half a point. So they must think the Fed's not going to do too much.
Right.
26.
They also severely revised downward the GDP growth. They thought that we were going to be at 2.
Fannie is predicting GDP?
Yeah, Fannie's predicting GDP, believe it or not. I was very surprised. They had everything. They had housing sales, GDP,
this is
interest rates. Yeah, this is the CPI, the Consumer Price Index. They predicted all of this stuff.
Yeah, they're going to be in the poly market game here before you know it.
Exactly. Yeah. One of my friends is doing that right now. He was joking it. They're thinking that by the end of this year, we're only going to be at a 1.5% GDP for fourth quarter growth, just fourth quarter, not the whole year, but year over year, fourth quarter. And they think next year we're only going to be at 2.1, which is lower than we've had for the last couple of years because our GDP has been in the high 2s for a couple of years now. So they're thinking it's going to be a weakening market, is what Fannie Mae is predicting, that we're going to be in a weaker market, not a stronger market. And it's funny because when I talk to people on the street, there's still so many people that think that the market is good now and it's going to get super stronger, but there's just nothing there. What were you saying, Mike?
Just about GDP to me, like GDP as it relates to global GDP. Like, are we still is everybody slowing down, or is it the U.S. that's slowing down and other people's are picking up? Right. So if it's all relatively slowing down, then it's kind of a nothing burger, right?
Right. That would make sense.
If the U.S.'s GDP is decreasing, below predictions or below trends, and everyone else is kind of picking up, then it's like, okay, now what's going on?
Right.
Yeah.
So what they're expecting is more of a malaise, a continuing of the malaise. We're not picking up. We're not getting back to normal. We're still going to be 10%.
Maybe it is normal.
Maybe it's the new normal, but we're 10% over the last 15-year normal for sales.
I think Johnny's point earlier is still critical, which is what's inventory look like, and who's selling. Do we have too much inventory? Not enough inventory?
Well, that's the other thing. Like the builders, right? How many years have we heard that the builders haven't built enough homes, right? And when we were going through COVID and stuff, it was very clear we didn't have enough homes because there was so much demand. We didn't have enough homes to sell.
Money was cheap.
Money was cheap.
Yep.
But what I don't see is we've had such low sales now for 3 years in a row, right? And maybe 4 if we count next year. So if we had all those lower sales, then we shouldn't have a spate of new construction that needs to be built that isn't built because people aren't even buying the homes that are here.
No, the key
at
is,
a high level.
The key is affordable.
Yeah, that's a
really key aspect.
And that was making me think, who's going to be like, I'm hoping that we find a new innovator that can take that 3D printing, because I heard that I never went there and I should have done it. They were doing a 3D printing house in North Palm Beach, and I forgot to go over there to check it out. But can you imagine if they found affordable ways to build homes to make it way more affordable so that people, to make affordable homes? And the 3D printing seems to me like a very natural, smooth way to get into that market and make the homes more affordable over time. I'm not saying we're there right now, but I think we might be there right now. We just got to get some innovators who really embrace it.
Totally wipes out an industry, though. All that craftsmanship, the actual woodworking that's involved, the actual hands, the talent required to build a home, that kind of wipes out an industry.
People will pay for that, but people will pay for that. The luxury people will pay for that.
This is true.
This
is true.
And then the people that just want an affordable home that's reliable and safe.
Be a wonderful option.
Right.
Yeah,
so
I don't
really
know how long it has to go before it's even costs to traditional construction, right? Where we're talking about putting blocks
they
together.
They say they can build them in like
together.
10 days. It takes them 10 days to build these
No,
like 1,200 to 1,500 square foot homes.
That's amazing.
Yeah.
Well, but
And that
they
includes
still have to
the
be finished.
foundation. That
Yeah.
includes doing the footers, the foundation, putting the walls up, right? And then putting all the electrical and plumbing and the drywall and everything. It's
No.
everything 10 days.
No,
Yeah.
can't be.
Man,
Can't be.
that's
Yeah.
Can't be.
how do
That's
you do
crazy.
that?
I've
Yeah, I
seen
could-
YouTube videos where they've done it. I'm not saying it happens all the time, but I've seen it.
I mean,
done.
I've seen TV shows where they've, built somebody's dream house,
Like
in
Extreme
10 days.
Makeover? Yeah, like
it's like,
Extreme
okay, it's like,
Makeover.
do you really want to live in that house? But like
Well-
all those trade things, the plumbing, the electrical,
All
the
gotta happen.
roof, like all of that still takes whatever time it takes, right? Just because you put your walls up in a
If
efficient
you
manner.
3D print the walls where you can put the electrical wiring in, you don't have to start drilling all over the place and
But
all
even
that's
if it's-
in. And
even
your
if it's
plumbing,
2 months,
your
then
plumbing
that's
is there.
amazing.
Yeah,
Yeah,
even
yeah,
if it was 60 days, right?
Yeah.
Even if it was 60 days. So I really feel like that could be one of the innovative ways that we can get affordable housing again. And I forgot to mention something about. I'm sorry, I'm bouncing all over here, but I wanted to bring something up for Ross because when we were talking about the good news for insurance, one of the things I wanted to mention that I forgot to mention is that if you own a multifamily home or a non-homesteaded home, people are still even seeing 5 to 10% discounts on those type of properties. So if you have like a rental property or investment property, hey, let's go get a
Shop your
quote for
rate.
you and shop your rate.
Sure.
You still get savings, maybe not as much as homesteaded properties. Is that true, Ross? What I read, or have you not really encountered that?
Well, I mean, so when I hear non-homesteaded or non-primary residences, I think of Citizens, only because they just had in the last couple of years, they've had a surcharge for non-primary residences for someone. So if you own the home and you rent it to somebody else and that's their primary residence, then it still qualifies as a primary residence.
Ah.
But it's more if it's a secondary home or a short-term rental. In Citizens, their short-term rentals 30 days. So I don't, when you say that, and it costing something, that's kind of where
It's
it
all
goes
over
for
the
me.
place.
It's Citizens,
Yeah.
but
there might be rate decreases just in general across the board, and so
yeah, I mean, always
your
shopping.
investment, what would you call like a DP3 or a landlord policy might have gone down just because rates are going down.
Yeah, and I mean, and if it's a duplex, it is, you get to write it as your primary residence on a regular owner occupied family.
If you live in the one
if
side.
you live in the one side,
Yeah. What about rates on 3D printed homes?
yeah, I haven't seen those come out yet.
No.
They're not in the guidelines.
Have you insured one?
No.
No.
So
I was just thinking, like, I don't think the insurance companies are ready for that yet.
That's I wonder why that would be.
It's probably just not prevalent. It's probably just not really
Just too new
thing yet. Yeah.
to have a risk assessment.
Right.
I mean, but they're meeting building codes, I'm assuming.
Yeah, I assume they have to meet the building.
Yeah, I mean, you probably have to go through. I mean, a 3D printed home hasn't come across my desk as trying to quote. So
Maybe we should do a contest. The first one.
We want one.
I would
Yeah,
imagine
if you have a 3D printed house in the local area and you're listening to this, I'd love to talk to you and stop by and take a look at the house. Right, I would to find out more about it and the whole process. I think it would
Maybe
be
even
fascinating.
buy
Maybe we can have them come over here and talk about what it's like to have a 3D printed house. That would be kind of cool.
It would be.
Hey, I wanted to talk about something that I thought was kind of interesting. Remember, I mentioned about the foreclosure filings October 1st, the COVID forbearance programs for mortgages ended, and there might be a rash or a flood of foreclosure filings against a lot of people, maybe as much as 1 million FHA owners that are behind on their payments right now.
Right.
I thought that there was something that was very interesting. The Urban Institute took the statistics from the National Bureau of Labor and Statistics, and then they analyzed the BS National Labor Bureau, National Bureau of NBLS, to find out like what they found out about people that were in forbearance and how it affected the housing market and how it affected the families themselves that were in the forbearance and everything else. And I thought it was kind of interesting, so I thought that we would bring it up. So a couple of things in here. There were 8 million people who took advantage of the COVID forbearance in the country. 8 million people did, right? I thought that was interesting to get an actual number.
That's a big number.
So 8 million people. Now, out of that, they found out that 94% of the people that went into forbearance did it because of job insecurity, right? That makes sense, right?
Sure.
But 94%. And what they also found out of the 8 million, there may only be like 1 million in trouble still, but the other 7 million were able to turn things around and get back on track again and get out of the forbearance.
It's great.
So
Good
that
number.
means 1 out
That's
of 8
great.
people that went into the program successfully, 7 out of 8 people that went into the program successfully were able to get out of it and get back on track. And what this Institute report was saying, that was a huge, huge positive impact on our whole housing market, because we didn't have that rash of 8 million foreclosures, being filed because the people weren't making their payments.
Yeah, so just remember some stats from earlier. There were 4 million homes sold in a year. There would have been 8 million homes going into foreclosure.
2 years of inventory, boom, right? 2 years of inventory, boom, right?
So that would
So,
have been a huge shock to the system.
so what the Urban Institute is saying, they want the government-sponsored enterprises like Fannie Mae, Freddie Mac, FHA, Department of Veterans Affairs, which does VA, to revise their rules to make it more clear of how these programs can help people, and to realize that some people are going to fall through the tracks. You had 1 million people that didn't make it, right? 1 million people took the thing. They got a roof over their head for a while, but they still never able to turn everything around. So you did lose 1 out of 8 people there, right? But the
So that
effect
million,
for the
that
national
million is going into foreclosure. That is going to happen.
all we know is that they're in some type of foreclosure. So that means that you could be missing payments, already filed foreclosure, have an auction date, or the house was taken back already in a foreclosure.
So the process.
That's what they count as the foreclosure market. That's another thing I learned. It isn't just the physical, hey, you were foreclosed on. It's the whole foreclosure process
Once it
when they give you
starts.
those numbers.
Once it starts, you're included.
And a lot of people do get out of foreclosure,
Sure.
right? I mean, we know that from the show. We've helped many
Sure.
people get out of foreclosure many times.
Yeah. And if you need that kind of help, remember
We're here.
FloridaTalkRealestate.com.
Yeah. So I just thought that was kind of interesting. So even though because when I was talking about the COVID forbearance with one of my customers who hasn't made a payment in 5 years, and I was like, 5 years, even me, it was like, wow, that's a long time not to make a payment and still be able to live in your house.
Yeah.
Right.
Well, think about that.
What were the extensions based on?
Well, this person had a hurricane forbearance first and then went into COVID. So they had a double forbearance.
I mean, that's 120K you owe them. I mean, easy.
Yeah.
Yeah. You have to hand that over to get out of your forbearance. That's
Not necessarily. You got to, depending on the terms of the forbearance, like the standard COVID one, they put that money on the back of your loan.
Oh, so that's a very different forbearance. Yeah.
Yeah.
So there's no reason for foreclosure in those situations.
Which might be what Jim is talking about, which is like, hey, this was actually successful. So people got in trouble. Well, you allowed them to miss payments for a series of months.
But if they're all getting added to the back of the loan, why isn't it 8 out of 8 getting out of it?
Because some people just can't afford their payment.
Just at all.
Their initial payment, they can't afford it anymore.
Usually what I see is with the people that get really trouble and then they get the help and they still are in trouble. They were always in trouble. I hate to say it that way, but they were always trying to find a new program or a new refi or whatever in order to try to make ends meet all the time.
Or just their income situation changed sufficiently that they just can't
and they
afford
never
that payment.
rebounded at all, right? And they just didn't either have the skill set or the luck or whatever it takes in order to make it happen.
Now, of course, those people should be exploring selling, short selling, probably not even short selling, but selling, retaining their profit, reset, some sort of reset. It's hard to do. It's hard to do.
Yep. Just a little quick service announcement for people that do get in trouble with their mortgages, even if they haven't had a foreclosure yet or anything. Please do not just go to those we buy houses fast for cash kind of companies. You're bringing a water pistol to a gunfight. I don't even want to say a knife to a gunfight. It's a water pistol gunfight. You're going to get creamed unless you really, really know what you're doing.
Some of those water, they have high powered ones.
Super soaker.
Super
Yeah,
soakers,
exactly.
Keep people at bay.
So I was at that free legal event where AJ Holman and I were invited by Natalie Medina to go and take a look at the Free Legal Aid Society, and what they were trying to do is estate planning, but they had a lot of other really great legal aid questions there. We're going to be bringing some of those people onto our show to talk about some of the stuff. Will be pretty interesting.
Nice.
But there were like 20, 25 people showed up to this, and you could tell that almost all of them were there for estate planning, and almost all of them were inheriting houses, or they were trying to transfer over properties for an elderly person over to some other family member or something. And what I was really surprised about is how many of them were approached by we buy houses fast for cash companies, and the Legal Aid Society people were saying, be very careful with that. You really have to understand what you're signing. Their contracts usually aren't the same as regular people's contracts that you normally use in a regular transaction. And they're usually way more sophisticated than you. And you really have to
calls
understand.
every day. People want to buy my house.
Do you still get calls like that all the time?
Every day.
Yeah.
Maybe not every day, but I'll get a call. Sir, are you interested in selling your home? Well, no.
Who's this, Johnny?
Do you know anybody who's interested in selling their home?
Yeah.
Right.
Exactly.
Sometimes I talk to those.
Yeah. So
they're working out there.
Do you know anybody who needs a loan?
Yeah, exactly.
Yeah.
Well,
do you need a loan to buy the home?
What kind of financing you guys? But the problem is you're talking to some call center person.
Yeah, exactly. So please, if you're thinking, if you have like an inherited property or something, or a property that your family doesn't want anymore and you need to sell it, and usually people that are doing that, selling it, the we buy houses fast for cash kind of companies, is because the house is in disrepair. They don't want to fix it up. They just want to move the property and take as much as they can. Because of the market today, you can do that all day long and make way more money. Let me give you a real life example. The house we just sold on Cheryl Lane for Vic. When we put the house on the market for months as an investment property, we might have had 20, 25 investors come there, couldn't get anything close to what we were asking for. Then we raised the price a little bit, not too much, thanks to AJ Holman. He told us to raise the price a little bit, put it on the open market. We did, put it on the MLS. 8 days later, got full asking price by 2 people.
Nice.
Right? More than all the other investors offered, right? And we made more money, and the person didn't have to do anything extra to the house, and they weren't planning on doing. The house is not perfect by any means. It needs some TLC, and we got way more money than an investor will do. And you have this pretty good confidence that you're going to close. With the investor, you really never, if you're not going to close or not. You don't know until you're at the closing table and everybody's signed and everything.
Huh.
But with a regular sale, if you have a good realtor and you know what you're doing and everything, you can be pretty confident that you're going to close. So please don't be taken advantage of. Now, those companies can sometimes be very valuable and helpful to people.
Oh, it's a tool you have in the
yes,
toolbox.
it's definitely a tool. I work with one of the We Buy Ugly Houses guys because they're one of the ones I work with are very reputable and trustworthy and do what they say they're going to do. Just wanted to do one more thing before we wrap up the show, Johnny.
Sure.
I wanted to say thank you to everybody. I'm just going here one more time. Thank you, everybody that put out reviews today on Florida Talk Real Estate LLC, the Google reviews. Susan, one of our favorite listeners of all time, she put out an amazing review for us. Thank you so much.
Thank you.
Amazing group of people to have on your side. I was looking to buy a townhouse in 2021 and have a pity named Hudson because of my dog. A bunch of places wouldn't allow him in the HOA. They found a single family home with a big backyard for me. Thank you so much. She's gonna have pictures on there and everything. So I'm so glad she has Hudson pictures in the backyard hanging out.
Cool.
Nate, who just gave a donation to the KOPMN.org, which is on our Facebook page to help raise a computer for the charity for that group of kids. Nate wrote, Jen DePola and his team are first class. That's awesome. Derek R., who's been on our show, Deborah Radzikowski, been on our show many, many times in the past. has a really great company that does luxury builds and luxury builds.
Oh, yeah.
He gave us a really great review. So thank you so much for everybody doing that. If anybody's listening and haven't done it yet, please go to the Florida Talk Real Estate Google reviews and just put out a review. Tell us what you love about the show, or if we helped you, let people know about that so everybody knows we're legit.
Yeah, that kind of stuff can go a long, long way. Hell, my company does the same thing on the regular. A lot of people look into that stuff and take it to heart, and
They
so
do.
it can be very valuable for the team. If you've ever bought a home, sold a home, were stuck with a home, didn't know what to do, just reach out to the team, get some information. Many have done that over the years. This team offers a ton of free advice with no obligation. They know that the business comes when you take care of people, and it has worked out for 13 plus years now. Many have gotten a lot of free advice. And if that's you, then you can take a moment to leave a Google review. We sure do appreciate that. Of course, on Facebook and YouTube, hit the share buttons. You never know. You can change lives, including your very own, with the pros. It's FloridaTalkRealEstate.com, the one-stop real estate shop. Always remember, access to the entire team, one click away at FloridaTalkRealEstate.com. Like I said, Facebook and YouTube, Florida Talk Real Estate on both. And of course, Saturdays bringing you 2 hours of infotainment. Jimothy, thanks for everything always, my dude.
Thank you, Johnny. Have a great weekend, guys. Don't forget Florida Gator football pregame, 4:00 right here on Real Radio.
Excellent. Locker room's coming up next as well. Hope you guys are going to be sticking around. Mike Rauch, mortgage guy from the mortgage firm. Have a great weekend.
That's right. I'll see everyone at the FAU game today.
Beautiful.
Yeah.
Full house.
Family weekend.
Nice.
That's cool.
Down.
And of course, Ross Komarinetz, he's with Brightway Insurance, Juno Beach. I hope you have a great weekend.
Thank you. I hope you do too. I hope you break the record and get 22 pilots.
I'm going to try. I'm going to
Oh.
try. I'm going to
Oh.
sure try. I actually want to shoot